But I'm very confident that the industry will grow. I think we're seeing institutional before, when we talk about institutional participation, we're talking about institutional traders potentially like allocating some funds trading Bitcoin or something. But now we're seeing institutional treasury come in. And I actually heard different versions of this rally. And they were saying that there are just a few institutions allocating 1% of their treasury into Bitcoin, and that's causing this rally already. So just imagine like how much more demand there is once more of the treasury managers figure out that this is what they need to do. So from my perspective, I think this year, yeah, it has been pretty bad in almost every other instance, but it has been good for the crypto industry. That is really showing that the fundamentals of Bitcoin, fundamentals of cryptocurrencies, that it is limited supply, there's no inflation, it is a hedge against all these other macroeconomic changes. And I think for our goal is really just to keep our service up while this industry is rallying. So we got to be able to handle the number of new users coming. We got to handle like peak traffic, peak volumes. Got to do our KYC, AML. All of those things most of those things don't scale very well because there's sometimes human components to them. Mm-hmm. So we're just trying to find out better ways to be able to service institutional participation as we define it now. Like treasuries coming in, they will want to do due diligence on us, and how to service potentially microseller, MicroStrategy firms like this. So this is going to be our challenge going forward. I'm not worried about the industry. I'm very worried about the economy overall. But the crypto economy, the crypto industry will be very good. So I think Michael's really joining early, and in his own words, kind of front running the other late adopters. So I think that's a really smart strategy to adopt.
Cool. So on that theme, Michael, of trying to 10 times this industry, let's think even bigger. Let's say 100 times this industry. What's your view on how we've got to get there? We were talking earlier around things like demonstrating to people how big the Bitcoin economy is. How do you quantify the Bitcoin community? Things like that, I think, are really important, and you've got some great ideas on that. So do you want to share with us how you think we can 10 times, 100 times elements of the Bitcoin economy?
Well, I think that it starts by rotating from one narrative, which is, well, Bitcoin is a very interesting uncorrelated digital asset with high volatility, with high potential returns, and you can put 1 to 2% of your portfolio into it with or without leverage. But that's one. That was a narrative, and the speculative narrative was predominant before March. But that's not going to appeal to 99% of the investors or the money in the world. They want something different. They want Bitcoin is the ultimate synthetic long-term treasury reserve asset. It's an engineered safe haven asset, engineered to be superior to gold in all aspects of a bearer instrument that's a store of value. And if I go from one to the other, then I'm not talking about getting 1% of the money from 1% of the investors. I'm talking about getting 50% of the money from 100% of the investors. Okay, so what does that mean? Well, I mean, it means that the people that we want to appeal to are the people that put their money in gold because they don't trust fiat instruments. So there's $10 trillion there. So they'll be looking at, how does Bitcoin compare to gold? How does Bitcoin's volatility compare to gold, returns compared to gold, trading liquidity compared to gold, et cetera? How many people hold Bitcoin versus people that hold gold? I think the second big, by the way, and that's $10 trillion, right? So that gets you a factor of 20 to 50 there. The second bucket is people with bonds. $17 trillion of negative yielding debt, $100 trillion of 0 to 3% yielding debt. Why are you putting money in bonds, sovereign wealth? It's a safe haven. So people's reaction is the market gets scary, they run to a safe haven.